Hi guys, it's Annika here with TipRanks, and today we're looking at whether Boeing stock is a buy. Boeing is headquartered in Chicago and it specializes in security technologies, space, defense, commercial jets, and aftermarket support. It offers bespoke products and services to over 150 nations. Many investors are bullish on Boeing because the shares look relatively inexpensive compared to recent historical valuation multiples. Also, the company is set to see significant growth, especially as pandemic restrictions have eased and more people are traveling. Boeing is recognized as one of the world's biggest aerospace corporations, with around a 38% market share in total backlogs. Boeing's major competitive advantage is that its sales and production facilities are located globally. This gives them economies of scale. And as a result, it has a strong international presence in over 150 countries. The company's collection of creative products released over the years is one of its strongest assets, as this includes cutting-edge fuel-efficient technologies and lightweight carbon composites. They have a widespread business network with many companies, including competitors, that work and have relationships with Boeing. The ticker for Boeing is BA, and the current price for Boeing is $220.03. And the analyst rating consensus is that it's a moderate buy, and the analyst price target on BA is $266.07. This is a 20.92% upside based on 14 Wall Street analyst ratings offering 12-month price targets. The smart score for Boeing in that it's neutral in terms of outperforming the market. Analyst ratings deem it to be a moderate buy, although TipRanks investors are very negative. Blogger opinions, however, are bullish and hedge fund activity has increased. Technicals, however, have been negative. Insider activity also shows that many have sold shares, with fundamentals showing a minus 8.94% return on equity for the trailing 12 months. Looking at their recent results, the company earned $15.3 billion in revenue in Q3 of 2021, which shows positive growth from $14.1 billion in the third quarter of 2020. The company is expected to benefit as passenger traffic returns to 2019 levels in 2023 to 2024. Could this be an opportunity to invest before they start seeing significant increases in their revenue? The company also demonstrated growth in commercial airspace and global services segments, where it saw sales increase from $3.6 billion in Q3 of 2020 to $4.5 billion in Q3 of 2021, and $3.7 billion in Q3 of 2020 to $4.2 billion of Q3 of 2021, respectively. The defense, space, and security segments, however, experienced a year-over-year decline in revenue from $6.8 billion to $6.6 billion in the third quarter of 2021, particularly due to the impact of COVID-19. Boeing's debt for the third quarter of 2021 stood at $60.9 billion, which shows a sequential decline of $62.1 billion. As for the valuation metrics, the Boeing stock looks reasonably priced at the moment, as its forward EV to EBITDA ratio is currently 19 times, which is discounted relative to its 3-year historical average of 21.4 times. It looks even more attractive when considering that EBITDA is expected to increase in the coming years, following 141.1% growth in 2021, with 119.5% growth in 2022. Normalized earnings per share are also expected to grow rapidly in 2022, with a forecast growth rate of 406.7% as the company recovers from massive COVID-19 headwinds. This article on CNBC shows us that Boeing posts loss as Dreamliner flaws drive up costs, but airplane sales actually rise. So the deliveries of Boeing 787 Dreamliner have been suspended for much of the past year as it addresses several manufacturing flaws. The issues come as the aerospace giant is trying to get a footing from the COVID pandemic and extend grounding of the 737 MAX, which was lifted last November. However, Boeing plans to ramp up 737 MAX production to 31 a month, but of course further increases would be paced by the supply chain. As we saw in the article, based on TipRanks risk factors, 26% of risks are in production, with 17% in finance and corporate, 17% in legal and regulatory, 17% in the ability to sell, and 17% in macro and political, with only 4% in tech and innovation. However, despite this, Wall Street's take is bullish. From Wall Street analysts, Boeing earns a moderate buy consensus rating, based on 9 buys and 5 holds assigned in the past 3 months. So guys, what do you think of Boeing stock? Do you think this is an attractive entry point? Leave your thoughts in the comments below. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, none of this is financial advice. I'll see you guys in the next video. Bye!